Hello. Welcome back to day 6 of our 10-day business mini tune-up program. In today's session, we're going to talk about tax planning. Now, taxes over your lifetime is probably your biggest expense you're going to have. Now, today you might say, why do I need to worry about taxes? I'm not making money in my business. I have no taxes to pay. But we're hoping to turn that around. Once you become profitable and start making a pile of money, you want to make sure you're not giving all that hard-earned money away to the government. This is why you need to look at your tax strategy. And this is where being a business owner gives you access to a number of tax breaks and tax deductions that you can claim to make your overall life more affordable and put more money in your pocket at the end of the day. So we're going to move on to our tax planning session. So day 6, Tax Planning 101, reducing your tax bill. Now, why is tax planning important? Well, the key reason is because you don't want to overpay taxes. Unless you feel like donating to the government and think that they can spend your money more wisely than you can, I would strongly suggest that you maximize your tax planning so that you keep as much of that money in your pocket through legitimate tax planning strategies. Now, some people might say, oh, you're cheating the tax system. But this is where the government has given us a variety of tools that we can use to take advantage of tax deductions and tax incentives. And being a small business owner is one of the biggest advantages you have compared to an employee. Employees, they literally have hardly any deductions outside maybe medical expenses, education, savings. After that, there is nothing. They pay the highest amount of taxes. Being a business owner, yes, there's a lot of deductions you can claim in order to minimize your overall tax bill. Now, this is where you might say, well, ain't I cheating the tax system if I take advantage of these deductions? Well, no. The government has allowed you to claim these deductions. It's part of their way of providing incentives to certain parts of the economy. That's how the government works. If they want to, say, promote electric vehicles, well, they often start giving tax credits to people to buy electric vehicles. Likewise, they want to encourage people to invest in the business market. Small businesses make up a large percentage of our economy. This is where, being a small business owner, you have access to these incentives. And this is where, all throughout the years, there's been tax judges who've made comments and it basically says taxpayers have the right to organize their tax planning in order to minimize their tax bill, providing we follow the rules. And that's the key thing. Yes, there are a large number of deductions, but you have to make sure you follow the rules and claim them properly and keep track of the proper documentation. Now, what are some of the key things you should be focusing on? First of all, are you set up with the right business structure, like the taxable entity? Are you just a sole proprietor, or are you a partnership? Are you incorporated with a corporation, or in the case of the states, a limited liability company? There's a lot of options available, and some of these options provide additional tax incentives that you could take advantage of. Now, some of them also come with paperwork requirements and legal requirements, but that's the trade-offs to get some of the tax benefits. So this is where sit down with your lawyer and your accountant and ask them what business entity is ideal for your particular situation. Now, the next one is Keep track of all your deductible expenses. This, I encounter this every year with clients. They bring in their paperwork, I go through the receipts, and I start asking questions. Well, did you use a vehicle? And of course, they usually say yes. Well, where's your gas receipts and your car repair receipts? Oh, I never kept track of them. This is where you need to start tracking all your expenses. And one general advice I usually give to my small business clients is don't throw away any paper. Just keep every shred of paper you have, because you never know when it can come in handy. All too often, I've been audited myself over the decades. This is where there's plenty of times where I'm glad I kept this piece of paper or this document, because all of a sudden I could pull it out and say, here, this provides additional proof that I incurred this expense. But this is where you need to provide the documentation. If you just start writing down numbers on your tax return saying, I spent $10,000 here, $5,000 there, and they come knocking on your door and ask you, show me the proof. If you don't have those documentation or those receipts, odds are they're going to take out the red pen and start crossing out all those deductions. You need to keep track of everything, and the best place to start is a good basic bookkeeping system. And with this bookkeeping system, document all your deductions. Keep track of all your supporting papers and keep them for the required time. Again, if you ever audited, if you don't have the paperwork to back up your claims, they're going to get disallowed, and you could be hit with penalties and interest, which you don't want. Another feature is look at tax advantage retirement accounts. This is one of the key tax planning measures that employees still have. Just remember though, yes, they create tax deductions now, but the money is tied up within this retirement account. You want to make sure this isn't money that you need for the short term. The money should be there for long-term retirement use or long-term savings. If you have $20,000 and you know you're going to need that to put a down payment on the building 3 years from now, putting that money inside a retirement plan may not be your best option, because yes, you get a tax deduction now, but 3 years from now when you need to pull that money out, it's going to be taxable income, and you may end up paying more taxes 3 years from now when you pull the money out, if you're in a higher tax bracket, than what you're saving now. So just be aware of that. Anytime you use the retirement deductions strategy, tell yourself, yes, that money is for the long term, and I do not have any need for it in the short term. And then finally, start looking at proactively looking at your tax planning. Look at the next couple of years. Are you going to have major expenditures? Are you going to have a sudden boost in bonus income for some reason? Start asking yourself these questions and start planning for it. There might be opportunities for you to average out your income and expenses over the years to minimize the amount of taxes, and mainly by keeping your taxes taxed in as much of the low tax margin brackets as possible. Ask yourself these questions. So this is just a tip of the iceberg in terms of tax deductions you have available. This is where, for your action plan, I want you to start taking a look at all your expenditures and start asking yourself, are you keeping track of all the expenses you have that's remotely related to your business? This is where start asking yourself, are there any deductions that I'm not claiming that I use for my business? Things like, what about my vehicle expenses? And am I accounting for the business use of my vehicle? Do I use my home office? or any part of my house for the business? If so, there may be potential tax deductions you can claim. You may want to ask yourself, okay, I go to these training conferences like in other cities. Am I writing off part of the expenses of traveling there and taking the course? That's where there could be a whole new strategy around timing your training courses and your vacation times at the same time, and maybe writing off a portion of your so-called vacation as a business expense, if as long as you meet the requirements that you are actually spending part of your time there for business. So there's a lot of opportunities. You just got to make sure you start tracking them. Now, this is another area you should work with your tax professional, because there's a lot of special requirements for some of these deductions, and you want to make sure you're meeting all the requirements. Like, for example, if you're claiming part of your home expenses as a business expense, make sure that you meet the definition of or the qualifications to claim your home office expense. Make sure you're claiming the expenses that you're supposed to be claiming, and make sure you're not bringing in a bunch of personal related expenses that could throw you off track from being able to claim these expenses. Working with a tax professional can help you overcome the obstacles or the roadblocks you may encounter when trying to claim some of these deductions. And as well, being self-employed, especially if this is your first year, you got to be careful about your cash flow planning, because all too often in the first year of business, people are so used to being an employee and having taxes automatically deducted, they just assume, okay, yes, I'm making this money from my business. I don't have to, I'm not paying any taxes on it. Well, guess what? At the end of the year, when you file your tax return, they're going to ask for that taxes. And odds are they're going to start asking for quarterly installments for next year's taxes at the same time. So unless you put money set aside to account for your tax bill when you fill out your tax return, all of a sudden you may have to pay 2 years of taxes at once, one for the past year and one for installments for the next year. And this is going to put a severe strain on your cash flow. So just be careful. Make sure you put money aside to account for your future taxes. So that takes us to the end of our day. Now for your homework, this is where what I want you to do is just start looking at your expenses and asking yourself, are there any expenses here that I use for business that I'm not currently claiming? Like, these might be more expenses that are part personal, part business, and you just never bothered claiming any of it. Well, normally you are allowed to claim the business portion of that expense. It might just be a percentage, but it does help out. It gives you some extra tax savings. Just make sure you document everything and you have the right paperwork. So meet with a tax professional, and I'm going to throw in an extra bonus. I just created a recording of my tax masterclass. It's a 2 to 3 hour presentation where I go into a lot of the tax planning opportunities for small business owners in more detail. I'm going to give you access to that. So it'll give you a lot more background on what you can do as a business owner when it comes to tax savings. And then finally, set up a quarterly tax savings account just to put money aside for your future taxes. Now, this is where if you're one of the type of people where they like to spend money as soon as they see it in the account, this might be a good strategy. Just put it into a separate account that you don't touch, so that when tax time comes around the following year, you've got the money there to pay the tax man. So I provided space. Just make notes of any tax savings you can find. So that concludes our formal part of our tax presentation. In day 7, we're going to start looking at how to look at investments within your small business, whether it's buying other businesses or just making expansions to your existing business. So that ends for my talk for today. I look forward to seeing you tomorrow. Thank you and have a good day.